The second quarter of 2015 saw commodity prices generally decline due to excessive supply being confronted by weak demand. Here to shed insight on what's ahead, investment analyst Sal Gilbertie. First, let's talk about how agricultural commodities will fare compared to harder ones such as iron as well as copper. I mean, which ones do you think are more exposed to the market correction that happened in China a few weeks ago and the one that many analysts say is coming?
Right now, I think agricultural commodities have had such good supplies. There's been good weather globally. So I think most of them are down near their cost of production, especially the big grains, corn, soybeans, and wheat. Sugar has had a 5-year bear run due to oversupply, which seems to be ending. So I think the agricultural commodities actually may have a tough time going any lower. As for the metals, in particular the industrial metals, with China slowing down, that does have a great effect. We've seen the big hits to copper and aluminum. I think that as people get accustomed to China's new growth rate, remember they're still growing, they're not shrinking. And so, us being accustomed to China at almost double-digit rates or in double-digit growth rates, going down into a more normalized, still fabulous growth rate. Some people are saying 5 to 7%. These are enormous growth rates for an enormous country. And so I think that the price declines are pretty much in here, the initial price declines. I think that what's to come is going to be an adjustment, the world adjusting to China's slower growth, but still growth. And so, there's going to be a great demand for all of these commodities, no doubt.
Now, the same analyst, Thomas Shorter, who infamously predicted that there would be a market correction in China, says that there's more instability to come. How do you think the markets are prepping for this inevitability?
I think in commodities markets, they're stripping any type of premium out. And so with prices falling really hard in some cases, that's how the markets, at least commodity markets, are adjusting to future uncertainty.
Okay. Now, on the flip side, China's PMI, I just looked at the numbers. It edged slightly higher in September. So is this sort of being chalked up to market enthusiasm?
I think some of it may be. Some of it may be that the decline was a bit overstretched. I also think that the decline in energy prices, that China is an enormous energy user, and the decline in energy prices provides such a boost to everyone, individuals, companies, the government itself. That's just now starting to be felt. It takes a while for a decline in energy prices, or a rise for that matter, but we've had a decline to trickle into the economy. I think that's what's happening now, and I think that's going to help China quite a bit. I think it's going to give them a bit of a soft landing.
Okay, now let's move the conversation to supply and demand for frontier markets, including Iran. Tell me, how is it going to impact the conversation around commodities?
That's an enormous opportunity for the West, and for Iran for that matter. I think that the more oil is going to come out of Iran for sure. That's going to help the global economy. That will probably offset any decline in U.S. production from pressures on the marginal production like fracking and oil sands. I think that there's no doubt that the Iranian economy is going to receive a significant boost, and there will be certainly opportunities in Iran and with Iran's trading partners and those that benefit from a strengthening global economy along with a strengthening Iranian economy.
I've had a chance to speak to a number of investors very much interested in Iran. It seems that the institutional players are the ones that can really stomach all of the instability and look long term.
That's probably true, although I think smaller players that are nimble and are well connected in Iran and really know the lay of the land, if you will, I think there's going to be marvelous opportunities for people like that. But in terms of ordinary investors, unless there's an Iran ETF or an Iran fund that comes out that's focused on that, and even then people will have to look through it.
You can't talk about the opportunities in the Middle East without also discussing the rise of geopolitics.
I think the geopolitics in the Middle East are complex, to say the least. I think a strengthening Iran is good for Iran and its trading partners, as we've said. I'm not sure that the Middle East is feeling the benefits, obviously, of the declining oil prices that the rest of the world is. That said, the demand that is growing in oil, we're still using more oil every year than we did the prior year. And so I believe the Middle East, if they can hold out and oil prices don't cycle too much lower than they are now, I think the Middle East is going to be in pretty good shape because of the oil revenues that are going to come, because there's immense oil demand. And I think, again, Iran is going to benefit tremendously when those sanctions are lifted.
It sounds like optimism abounds.
You know, it really does. I mean, I'm a bit petrocentric, I think, in that regard. But I think with the prices of commodities low, with the price of oil low, with there really no fundamental structural problems that we can see that are visible in the global economy, I think things are looking much, much better than they were in 2008. I think they're looking much, much better than they were just last year in 2014. So I think we have a bright future and a bright 2016.